All right.
All right, guys. Good afternoon. Actually, this is MarketChameleon.com. I'm Adam. That's Dmitry making a special appearance
Hey
this afternoon.
guys.
Yeah, you know what? You know
Well,
what got Dmitry out? It's the chameleon mug, man.
it's the
Dmitry
chameleon
was
bug.
Dmitry
I'll
was
tell
like, I
you.
love that chameleon mug, dude. I got to get in on this action. So
Yeah, I had so many emails today requesting that chameleon mug. So I'm excited. I'm like, I have to get one too.
I know
That was a great idea.
so anybody who doesn't know, Dimitri's like the head chameleon. So when you say how does all this information, all this data get processed? Basically, it used to live in Dimitri's mind, and him and a team of guys had built this thing to actually do what it does now. So that's the chameleon. So there
Well,
he is right there. That's the king chameleon right there.
well, your brother, my partner William, he was the one who trained when I first came working on the floor of the Philadelphia Stock Exchange. He was like, he was my mentor. He trained me.
Wait, he was my
He's like,
mentor
I'm
too,
really
growing
sure.
up.
Huh?
He
Yeah,
was
when I
my
joined the
mentor
floor,
growing
nobody,
up too.
nobody, huh?
Growing up, he was my mentor. That's right. Yeah.
Yeah, no, he's a really good mentor. He's a really good teacher. He's very calm. I really appreciative of Will. A lot of people didn't even want to. They thought, because I was like really skinny and intimidated. I was shy. So they're like, you're never going to make it on the floor. And then I got a chance. But Will was really my mentor. He helped me out.
Wow,
So
that's awesome, dude. I've
yeah,
never
yeah.
heard that. Will never tells me the floor
Huh?
stories other than our stories of being in Chicago and that sort of thing. But he never tells me the stories down in the Philex and stuff like that. So,
Yeah, no, Will was great.
all right, man. Well, let's get into it today. Dimitri's going to dive a little
All right,
deep with us today. I'm going to click away from him as he brings up his screen. Why don't you go ahead and share your screen,
all
Dimitri?
right. Let me share it.
So I wanted to have Dimitri on for a while now to really get in and just dive deep on the chameleon. Dimitri's got so much
Yeah.
knowledge, and I know he's helped a lot of people with one-on-one training. So when you sign up, actually, if you click down below, there are links and everything to MarketChameleon.com. If you sign up for our premium service, we make a one-on-one training session with Dmitry available, so he can actually walk you through a bunch of the features on the chameleon. So what do you got for us today, Dmitry?
Okay, awesome. So right now I'm looking at SPY, and the reason I'm focusing on it is because we're kind of in a volatile period. So really when you're looking at trades or trade setups, you want to first look at what are the market conditions and what's the best way to trade around these market conditions. So you could have volatile periods, you could have non-volatile periods, you could have slowly trending up, or so in this case I'm just going to take a look at SPY and just kind of go over some of the checks that I like to do, and then we could just discuss possible trading strategies in these types of market conditions. And
Cool.
obviously right here, we see right now that the implied volatility is very elevated. The market's been going down. And one of the things that I like to go and skip to, and I think I have it up here, let me just see, just to get a sense of what the volatility in the stock has been doing in SPY.
Right.
And right here, and these are different metrics how to measure volatility. You have close to close, open to close. And over here, when we look at close to open, this is really looking at the opening gaps. And if you're a volatility trader, if you own gamma or if you own options, you want to see that this opening gap is rising, the volatility in opening gap, because this is really the best way for you to, if you own gamma, to make money, because you don't really even have to think about it. The stock just jumps from one level, from the close to the next level, and you kind of hedge your deltas, and you could really make volatility. So as long as you see this rising, volatility will keep increasing.
Okay, just so everybody saw how you got there. When you're on any stock, along the left-hand side, there are a bunch of buttons, and you just click on the stock volatility button. And so that's brought that up, correct, Dmitry, for SPY?
Right, exactly. And this is a one-year chart and just showing you the opening gap volatility.
Awesome.
And then you could just compare it to the volatility drift. So this is how the stock drift from open to close, and then you could just use the close to close. But
now, when you're looking at this,
you.
what are you looking at for a newbie like me? What are you looking at, and kind of tell me what you're looking for, and
Right.
what would you see here that would influence your trading?
So really quickly, I'm just looking at the trend of the volatility, and as a options trader, I look at, as a volatility trader, I'm just looking at the trend of the volatility, and is it possible for me to buy options and capitalize on the difference between realized volatility and implied volatility. So
Gotcha.
the first thing I do is just make a mental note of what the actual volatility of the stock has been doing.
Mm-hmm.
So this is just looking at SPY, the actual volatility of SPY,
Right.
and it's just looking at the log returns of to calculate the volatility.
Cool.
And that's all I'm doing. So just really quickly, I'm just making a note of how the stock is behaving, right? And then after I do that, I just kind of move on and make some other checks. So right now I'm just kind of making mental notes. I haven't set up a strategy yet, or I'm not sure exactly what I'm going to do, but I'm just kind of seeing how the stock has been behaving.
Right.
Does that make sense?
Yeah, absolutely. So what's your next your next step in the
So
process?
another thing I might just take a look at is how the trading action has been. So, for example, here, this is just a chart of how much it would cost you to protect the position for next 30 days in SPY. So this is like, buying insurance. How much would a synthetic put cost you? So you could see it's kind of been trending up a little bit here. And right now, I'm just hovering over, it's around 2.4% to protect 30-day position versus an average of 1.4. So it's about 1% higher than average.
Okay.
And another thing that
Now, is that average over the last month or year?
yeah, so this is over the last year.
After the last year, gotcha.
Yeah, this is this line looking over the last
Gotcha
year.
is the year.
And so you
Gotcha.
could see, like, sometimes what here is a little bit different is sometimes what you see is a market sell-off. You'll have a big spike, people buy insurance, and then it'll come back down. But over here, it's a little bit sustained. So you see it's not coming back up and didn't even spike. It kind of came up, tried to come back down, and every time it's just being bid up back up over here. So at least over here, there's a lot more conviction here. It's not just panic protection, but you do see some sustained buying over here.
Gotcha.
It's been happening already since October,
Yep.
right? So that's how long it's been. And this is for 30-day at the money. You could also take a look, let's say 10% out of the money, and also you just kind of start seeing the same chart. So people are buying protection, and those premiums, are ticking up, and you can see we have everything is elevated here.
Sure.
So calls, puts, everything over here. Another thing that I like to look at is just on the trading activity side, and what this is saying is how much total notional value of puts traded, like crash puts over here. So the crash puts are anything that's 20% away, below the current price, the stock price. So you have about 1.8 million. So that's today. It's traded okay. It's been around the average, but you could see, like, on some down days over here, we had some big
Significant. Yep.
significant where people are starting to buy protection. And as you can see, it looks to me like it's still on. So what you would like to see is maybe a big drop and a big move, a lot of notional here, and then it comes back up, and that's kind of like a sign of capitulation, right? Like you get a lot of people buying protection or speculating on the downside, then the stock market just kind of like comes back up and people are getting out.
Gotcha.
But
at this point, you're still in the gut stage, right? You're in the eyeball, just kind of looking at it, getting a feel for it.
Yeah, and I'm just getting a feel for it, just to know kind of I'm trying to paint myself a picture, what's been going on, and where things are setting up right now. Just to paint myself a picture. I don't know yet what I'm going to do, but I'm just painting myself a picture of the trading activity. So, over here, I see over here, there's $25 million worth of puts trading that are between 10% and 20% out of the money, which is above average. So that's like significantly above average. So we see today that people are still, going in there and pushing up those premiums to the downside. So over here, what it's telling me is this. Look, this to me isn't panic, and I've seen money panics, but here, you're seeing an accumulation of puts, right?
Right.
Nothing. The stock didn't do that much today. It's basically been unchanged. So if we continue going lower, this could be, a little bit of a breaking point. It could accelerate down. This is something similar when we had a flash crash, right? People
Sure.
just kept accumulating puts, accumulating push until finally it just broke down.
Yep.
So something just to consider, as you're going through your checks.
Now, just remember, guys, anybody who's following along on MarketChameleon.com, remember you do need to sign in to be able to see some of these things. So go ahead and sign in. You can create a free account, and of course you can do the 7-day free trial to get all the data and analytics we're using here. So this is good stuff.
Yeah. So some of this you'll be able to see. Some of this,
Yeah.
The premium. So another thing so when you're looking at the market, and right now you're trying to trade volatility, the markets are volatile, and how do you profit from that, right? So you start looking for opportunities, and you kind of need some tools and assistance to point them out and where to look, because there's so many, there's over, 4,000 or 5,000 different stocks and all these options. So how do you know? So you need some tools to kind of help you point you in the right direction. So one thing that I do is I'm just going to go over here, and this is just a back test of the last 12 weeks. And I already set this up. And this is looking at the money straddles, and which at the money straddles tended to perform well. And so you have these win rates, and we have 3 different views here. So this first view, this is if you just went in there and bought the at the money call and at the money put, and just held it to the end of the week. You did that 12 weeks in a row. This is your win rate, average return, and then you have some more statistics there, and you have your Sharpe ratio. So that's one way to look at it. What has been working, right, and in what stocks. Another way to look at it is, well, what if I did the straddle and just hedged the delta neutral, right? So then I hedged the delta neutral, and I held it from Monday to Friday. How would have I done? And these are all the individual stocks, and you have your win rate, average return. So you kind of get an idea where things have been working, where things have been possibly underpriced, have been moving much more than expected. And then it gives you ideas, maybe, these are some stocks to go look at, and how are the straddles lining up today.
Right.
As a professional trader, this last view, this is more trading it's rehedging the deltas at the end of the day. So what you're trying to accomplish here is scalp the difference between the implied vol and realized vol. So at the end of each day, from Monday to Friday, the stock moves, you would rehedge the delta. So if the stock moves up and you would be long delta, you would sell some stock based on your delta. If the next day moved down, you would be short delta, you would buy back some stock. So you start making money, and because you have this protection from the straddle, you would start scalping the stock. And if the realized volatility ends up being higher than the implied volatility, then the difference, whatever you made in trading the stock, it would offset the losses in any premium that you lost in the option. So that's another way, and that's how most professional traders look at it. They would hedge their positions. So over here, this just gives you a real quick back test of how that would have performed. You can just kind of click on it and get more information how that works out. So this is having that back test. It kind of gives you an idea of which stocks should I just start looking at? Where did it work? Because if I expect volatility to continue and I want to profit from higher volatility, where do I start looking, right? You kind of need a list. And
so you use this is your way you get into a starting position. This is where you say, okay, I'm going to look at these, get kind of a grouping of stocks to begin my search.
Right, because one of the things that you want to do is what is working and where, right? You kind of have to know, because nobody's going to come and knock on your door and tell you. So you need data to make that evaluation, provide you a list, and then you start kind of your analysis from there. So think of it this way: is if you're a real estate investor, right, and perhaps somewhere you start seeing that there's a trend in a particular neighborhoods or neighborhoods where people are buying houses and and the prices are ticking up,
Sure.
right? So you kind of want to get a list. Well, where is that happening? What is working? And where are the
Exactly.
best
Yep.
deals? Like maybe, how valuable would it be where you saw houses, moving from 150, 155, 160, but you still have a list of houses that, you could possibly pick up for 140,000,
Right.
130,000 before somebody else gets there, right? So you
Yep.
need to kind of have that. You need to be prepared, because if you're not prepared, then you're not going to be able to see it, and then that opportunity will be gone. And that's what we do here. That's why we create screeners, because that allows us to be able to screen out for opportunities, whatever market conditions we're in, and if we think we want to profit from that, then we need that information in front of us.
Awesome. And remember, everybody who's watching right now, we got a bunch of people watching live. Of course, you can hit us up in the chat if you want to ask Dmitry a question right now. He's doing some awesome deep diving for us, and I think providing some awesome information. Cool, man.
Okay, cool. Thanks. So I'm going to move on to next. So this is just a back test to see what has been working, what types of strategies have been working, and in what stocks, right? So that's what this is doing.
Yep.
Another screener that we have. Let me just see what I had here. Okay, another screener that we have is, well, what types of opportunities are out there right now? Like, I know what has been working, but what do I see that is happening right now? And
Right.
when you're a trader, one of the things that I learned really quickly when I came on the options floor is, nobody actually had prediction models, so nobody really traded based on where they thought things were going to go. They really had valuation models, like, what do I think this is worth, like, right now? Am I getting a good deal today, by today? But so you'd have to have a list of what's going on and have a way to kind of measure it, so you could benchmark it. Do I think this is too high or too low? Otherwise, well, how do you know you're getting a good deal? So over here, what this screener is doing, and it's kind of like a very simple benchmark, but it's easy to understand, and I think it's very effective. And here, what we did was we filtered out straddles, and this is straddles in December 21st, all the straddles in the marketplace. And this is the bid of the straddle over here. This is the offer of the straddle. And then we created a theoretical value to give ourselves a reference price.
Gotcha.
And this theoretical value, the way we calculate it is we looked at the last 20 days volatility, right? And what has the stock been doing in the last 20 days? And we took that volatility and you plug it into the binomial model, and it gives you a theoretical price. We also looked at the last 1 year volatility, and we took that volatility, we plugged it into the binomial, and then we get another theoretical price, right?
Okay.
And really, so this theoretical price, it's made up of the average. So we took the most recent data, what's going on in the last 20 days.
And combined it with the yearly data.
Right, and we combined it with the yearly data. We gave it 50, we took the average. We gave each of 50-50 weight. And then we created a theoretical value. So this way we could kind of compare the markets, what the markets are today, versus what the theoretical values are. And this is just, and this is going across all the universe of the stocks. So like, for example, if you think that there's volatility and the volatility is going to continue, you want to kind of grab onto something that could be priced still cheaply, right, relative to everything else. Because if the market's going to go down, the idea is everything's going to go down, right? If market will pull everything down, so eventually everything just starts becoming much more correlated in high volatility periods, and everything's just, especially the market leaders are going down, the market's going down. So you kind of want to see, well, are there anything remaining there that maybe I benefit? So I did, do a preset here undervalued underpriced straddles.
Okay.
So over here, then you get kind of a list, and that's why they're lighting up green, because it's kind of bidding through the theoretical values are bidding through the
right. So anybody who didn't see that took about, I don't know, 1,100 entries and sliced it down to 23, right? By
right, exactly.
Yep.
Right, and you want to be quick, right? Because the idea, if you're a trader, right, any good trader, you just want to be prepared, and you want to have the tools available that could get that to you quickly, no matter what it is. If you think the market's going up, it's going down, it's going to be more volatile, it's going to be, volatility is going to come in. You kind of just want to be prepared, just like you would be in any industry,
Yep.
right? And that's what it's doing. It's allowing you to really quickly look what's going on and where the opportunities may exist, right?
Awesome.
So that's what I did. So that's basically, and you could see right now, they're at least under these conditions only 23. There are only 23 left. So yesterday and the day before, I think they were like in the hundreds. So they're disappearing really quickly.
Yep.
So those are the things that I would start looking at. Especially the market's going down. Most likely all of these are going to start getting pulled down with it, right?
Sure.
No matter what they're going to start falling victim to it, and the volatility and everything else will go up along with it. So that's really quickly what we did with the SPY. I just analyzed it. Okay, it's in a volatile period. What would I do? And maybe what I'll do next time is, here's another thing. I know that the Fed's meeting tomorrow.
Sure.
Let's just see what the stock has done in the last. I'm just going to look at the FOMC meeting here and just load up. And this, I'm just looking at the stock behavior.
Yep.
Around the FOMC, and I'm seeing like today is like the day before. So it does look like the stock was a little bit stronger than weaker. 83% of the time. It's been up the day before. I think today it's been like unchanged and, with a slight positive move.
Yep.
Let's look at the day of the event. So it had 75% of the time it had a higher open. So I do see it, it gapped up a little bit, but then by the end of the day, you see drips. So it did weaken possibly right after the news. So it's kind of like, buying rumors, selling
Sure.
news.
Yeah.
So it did sell off here. And then I'm just looking at, how the stock did coming out after the event. Let me just close this. Do you see this?
Yep, we still have the thing up. Just so everybody knows, if Dmitry moved a little quick for you, when you're looking at the stock, in this case SPY, underneath the tools section, there's the event-driven historical insights button. Click on that, and then you can go ahead and select, the Federal Reserve FOMC meeting, and that's where this data all comes from.
Right. And this is, and I'll explain to you how I'm looking at this right now. And
Yeah.
I'm seeing like after the event, 1 day, 2 day, 3 day, I'm seeing there right now, all the moves have been negative on average. And I do see like it, so it has a little bit of a negative pull over here. Another thing that I look at is, the median returns, and I do see that they're all negative here. And you see over here, I'm getting a high and a low range for that period. So here I'm starting to take a mental note of the ranges, the price ranges. And when you go in there, and we'll talk about more about this.
Can you highlight where you're showing? I missed that there. Can you highlight that?
Do you see it? Yeah. Do you see over here where I'm showing the median price, and then I'm showing the best and worst?
It's kind of down below. Yeah. I can't really see that we're losing.
Can you
that
see it or no?
No, we lost that on the
It's showing
screen.
you the highest positive, highest negative move. So I'm
Gotcha.
seeing that there's a little bit of a skew. It's more, the negative moves are much bigger than the positive moves.
Right.
I have like plus 1.4% or minus 6.4%. Right. And so now I'm starting to take a note of the price ranges. And the idea is, when you start going into and making an options strategy, right, you want to create a strategy where you can profit from different price ranges, right? You don't need to profit just if it goes up or down, but you want to profit if, from a number of different price ranges. And that's what I'm starting to make a note of, where it could possibly move. And I do see that there's a little bit of more of a skew to the downside than upside. So in my mind, I'm just kind of going through scenarios, maybe doing like a double bear spread, or, selling an out of the money call and buying an out of the money put. But, now I'm kind of getting different types of returns, where I see like maybe, not necessarily maybe even take a delta, or maybe I would take it like a slight initial negative delta going out like a week or 2 weeks, and really profit from maybe profit from, really profit from a big down move, maybe slightly profit from a big up move, and maybe lose a little bit somewhere in between. So that's where I'm thinking.
Cool.
As I'm
Just
going
so
through
everybody
this.
knows, I've loved, this is a technical issue. It's below. Unfortunately, that data you're showing is actually below our slider on the yes. So they can't see it. That's at the bottom. So everybody, if you go to the event-driven historical insights for SPY and pop up the FOMC meeting, that's at the very bottom. The data Dmitry is showing with the median minimum and maximum returns in the last 12 matching instances. That's at the bottom of the page there. So,
Right.
but everybody can follow that.
So, yeah, and the idea is then you're trying to kind of establish a distribution of returns, different outcomes and what the probabilities of the different outcomes are. So this is just giving you like a picture of what it happened historically, and that's what we use as a guidance, right? And if there's anything different, then you might want to take that into consideration. So right now we are in a climate where we have China and China's economy, and maybe it's slowing down, maybe it'll go into a recession, and there's really no data for that. So now we're faced with a bigger uncertainty because we can't really model something like that. It hasn't, now it's like the second biggest economy. So what happens in China at this point, it's going to be felt throughout the world, right? Sure. And the fortunate thing in America, when it happens in America, we have a lot better data. We're more developed, and we kind of have more numbers that we could analyze and trust. And I'm sure that the Fed will come out tomorrow.
Trust, man. That's what freedom's about, my friend. That's right.
Right. So they'll give us some guidance tomorrow, but nobody really knows, and even they don't know what's going on in China.
Yep. Absolutely.
So that's a big unknown, and that creates a lot of uncertainty. So that we haven't seen that, and we'll see what kind of volatility that creates. And that's why right now you want to be careful a little bit until we get more certainty.
Yep.
With what's going on in their economy.
That's a good point. Everybody remember out there, I'm going to throw up the disclaimer. Everybody, these are just ideas. Remember, when you're trading options and all trading in general, option trading is risky. We're just bringing you some ideas today, but you need to do your own research. That is what the chameleon is for, right, my friend?
Yeah. Thanks, Adam.
Absolutely.
Yeah. So, I guess we'll stop here. We went over a lot of stuff, and the next time, what I was going to say is we'll actually go in there and set up a trade, set up a strategy, and look at the different risk rewards of the strategy. Try to create a value, theoretical value, and see if it's a good deal or a bad deal.
Awesome.
According to our model, and we'll take it from there.
Perfect, man. Good stuff, everybody. Woo! Loved having Dmitry on today, man. This is like. Hey, after the, I'm getting ready. I'm wondering what we should call this. Should we call this the after the close options report with Dmitry and Adam? How's that sound?
Yeah, we're analyzing the markets, before the FOMC meeting. Something.
Boom, pow. All right, man. It was a lot of fun. Remember, everybody, click down below. You can follow us MarketChameleon.com. You can sign up, get the free trial, get the same analytics and data we're using. And we'll see you tomorrow morning, everybody. Thanks, Dmitry.
Thanks, Adam.
Talk to you later, guys.